When people hear the words capital market, most immediately think about stock. But actually, the Indonesian capital market has many different investment instruments. Some are considered safer, some have higher risk, and each one works differently. So in this video, we are going to break down the main instruments in Indonesia's capital market in the simplest way possible. Let's start with the most popular one, stocks. A stock represents ownership in a company. So when you buy shares of a company, you basically own a small part of that business. In Indonesia, stocks are traded on the Indonesian Stock Exchange. Investors can potentially earn money from rising stock price and dividends, which are profit distributions from companies. But remember, stock price can move up and down quickly, so the risk level is relatively high. Next, we have bonds. If stocks mean ownership, bonds are more like lending money. When you buy a bond, you're lending money to a government or a company for a certain period of time. In return, they pay you interest regularly. In Indonesia, there are government bonds and corporate bonds. Compared to stocks, bonds are usually considered more stable, although they still carry risks. Another popular instrument is mutual funds. This is often considered beginner-friendly because investors don't need to pick individual stocks themselves. Here's how it works. Money from many investors is collected together and managed by professional investment managers. The funds can be invested into stocks, bonds, or other assets. So mutual funds can be a practical option for people who want to start investing with less complexity. Indonesia also has a growing Sharia capital market. These are investment products that follow Islamic financial principles. Some examples include Sharia stock, sukuk, which are Islamic bonds, and Sharia mutual funds. These products avoid activities considered non-compliant with Sharia principles, such as excessive speculation or interest-based systems. There are also more advanced instruments called derivatives. Their value depends on other assets, such as stocks or index. These are generally used by experienced traders and institutions because they can be more complex and risky. So the Indonesian capital market is much more than just stock. It offers many different investment instruments, each with different goals, risks, and opportunities. That's why understanding the instruments is one of the most important first steps before investing. Because smart investing starts with understanding what you're investing in.